Stock market today. Analysis for Aloha Wednesday, April 19th, 2023. This wonderful video is brought to you by ihavesuccess.com. I Have Success is in existence because I believe if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks that you'd be happy to own. Doesn't really take a whole lot of time. So you'll be doing this without spending a lot of time in front of a computer. You can work on creating financial freedom. You do have to set up things kind of the right way. And speaking of setting things up in the right way, at the 1 minute mark of this video, a link is going to pop up here. Get ready for it. It's coming in 2 seconds. Boom! There it is. I put it at the 1 minute mark specifically so you can easily remember it and watch it later at your convenience once this video is done. But that video will give you an overall fundamental premise of how you can help yourself create financial freedom and why selling cash secured put options on stocks you'd be happy to own gives you an unfair advantage versus other strategies. Here's a YouTube playlist that consists of 5 videos you can watch for free. Use that playlist in conjunction with these downloads to get a good idea. You can access them at the homepage, access over here, or you can pay to expedite this whole process. Check out any of that stuff. Tuesday and Wednesday, we didn't have any big announcements that are at least via Forex Factory deemed high impact. Tomorrow we got these unemployment claims, and then producer manufacturing index, I believe. Yeah, purchasing managers index, which could have some market moving stuff. It seems like ever since the Silvergate bank fallout and all that banking hoorah that was a flash in the pan, and everybody's back to acting as if there's no banking problem at all. Ever since that came and went away from the internet psyche, seems like these high impact expected things really haven't had a lot of high impact. Again, over here at the heat map, we got a mix of a red and green, and we basically, we can split hairs and say, hey, this is not 50-50. That's 6.2% over 50-50. Yeah, you're right. And it's a little bit more new lows, a little bit more below the 50-day moving average, a little bit more below the 200-day moving average. But it's kind of a mixed bag. And for several weeks and actually months, I had been thinking that 2023 might leave the bear market by grinding sideways. In these top headlines, besides this one being an advertisement by Porter Stansberry there, which I bought some Porter Stansberry stuff all the way back into 2012. It was pretty fun and exciting. One thing way back in 2012, he was predicting that TLT was going to crash. I don't know if it ever crashed, but it was it's kind of the doom and gloom type of there's gonna. Get ready. America is going to have a massive change in 20 minutes. And the few people that buy my newsletter will be able to become massively wealthy out of it. Yeah, it's that type of thing. And yes, I have fallen victim to that type of marketing before. Whether it was really falling victim or just had an expensive education, I don't know. But Tesla is in here quite a bit. And we'll look at that. Let's get into looking at these things. So TLT, Porter, what's up? You had some good calls on other stuff, and I can't really talk too much smack about Porter because I did learn some really good stuff. Like one thing that he was saying is save 50% of your income. That's more than 10, isn't it? We're not talking about the richest man in Babylon. We're talking about the richest Porter Stansberry saving 50% of your income or his income. I'll save 50% of Porter's income. In fact, if it's Porter's income, I would be more than happy to save 100%. Oh, okay, so the dollar via UUP is down on the month, but it's just had this kind of volatile, really kind of making this channel on the way down. We see TLT still continues to be in this of this range here. It's still on the bottom part of the range. Gold is still hanging out above 2,000. Don't be surprised if gold futures get whacked. Right? Just don't be surprised about it. If it doesn't get whacked, I'm going to be more surprised. I will not be shocked at all if it does get whacked. I'll be shocked if it doesn't get whacked. And that's just what I've noticed from watching gold and silver since about 2007. So CL, crude oil, broke down a little bit below this $80 mark, but it's still up there in the high end of this range, right? From 64 being the low for the month of trading, right? 1 month, and 83 being the high. It's on that high end of the range. Oil can be pretty volatile. Bitcoin futures hanging out between 28,000 and 30,000 still. The VIX continued to make a new low today, and we're starting to see a bit of a, like, is it making this roundish type of top? We see a going sideways there, kind of topping out. We see some sideways here, kind of see some sideways here. We'll see how things play out. I have been and continue to be prepared for any direction, and that's being prepared for any direction works well for me. You know, if you can figure out how to be prepared for any direction, if you can figure out the secret sauce that I've been using to be prepared for any direction, I'll give you that hint right there. Looking at the 12 indices that I like to look at, kind of going sideways, pulling back a little bit. Is that going to start moving sideways? This is still moving up. Okay, we're up into this resistance point here. We see some sideways movement. Sideways, yeah, I get it. It dropped down, but we're kind of in this range still. It's been moving sideways, been moving sideways, been moving sideways. It's moving up, but it looks like it might start doing some sideways stuff. It's a little bit debatable right in there. And even though this is a volatile sideways, that's kind of what I see going on right there. And moving sideways right there. Let's, with a little bit of speed, go through these top 10 holdings of the big ETFs and laugh at how Google is in there 4 times and how there's such a big overlap. And what I mean by that is the top 10 of the S&P 500 and the top 10 of the Qs are the same except for Berkshire Hathaway and JP Morgan Chase are in the top 10 of the S&P 500, and for the Qs it is PayPal and Adobe. Well, basically, it's time to call your representative, and when you are, picketing and you're protesting about inclusion, I think this is unfair. What about the rights of these other tickers? I just really think it's unfair. I think it's super unfair that out of 2 of the big indices of the stock market that there's not much inclusivity here. Where's the diversity? And I really don't care what ethnicities and what genders and pronouns are running the board of directors. I mean, that's not enough. We need to have inclusivity and diversity in the actual tickers. Come on, let's get it in there. All right, enough protesting. Now it's time to make money. All right, so here we are. We're topping out. Right, we're seeing this. We got 6 months. You want to look at the year? Okay, we'll look at the year. All right, we're hitting this mark right here. Right. So is it going to push up or not? It's really the thing. Just like I was talking about yesterday. What's going to happen around 420? I know 420, funny. Well, what's going to happen around there? Volume. Let me open this up so you can really see what's going on with the volume, right? Yeah, your good buddy Brent. I'm just full of jokes today. Just full of jokes. The problem is nobody's laughing. I'm laughing by myself. Okay, Apple over here. We got a little bit of this possible W formation. Apple's just been moving on up. It's doing the Jeffersons here. Apple, how far is Apple going to go up? I have to see what's going to happen, man. The 170, whatever. I just said man. My apologies. If your pronoun is not man, I apologize about that. Come on, give me a little bit of break. I'm 46 years old here. I'm I'm learning, but I'm not 18, so I don't know it all. So it's moving up. Apple's moving up. How far is it going to move up? Let's see what happens around the 170. Microsoft. Bill Gates. I don't know if he's doing pronouns properly nowadays. I'm not sure. I think I should shut up about these pronouns here. We're up against this resistance, right? We got this around 300. Looks like some good resistance in there. Let's take a quick peek at the weekly chart. Oh, that's monthly. Here's a weekly. Yeah, the 300, and it's looks like some good, fairly strong resistance through there for Microsoft. Amazon. Everybody loves ordering. Let me rephrase that. Was that hyperbole when I said everybody? A few people, maybe a fair amount of people, love ordering from Amazon. I just made my first Amazon purchase, or maybe second in like the last 10 years. I made my second purchase a couple days ago, and we see this 105 mark seems to have some resistance. Look at this, gapped. When it gapped all the way down here, and it's had a hard time. All right, we see that 105 here, gapped up there, but back down here, 105. So we'll see what happens over there. Meta is let's see if it starts pulling back past this 210, and then from 210 to about 200, right? That's where I'm. Right now, I would still say it's in this bull. Just a little bit of a pullback like that. It's not really compromising the bull trend in my opinion. But if it starts coming down here to the 210, it might just do a little bit of sideways. I wouldn't doubt that. It looks like it could do some sideways stuff from about 210 to 220. But if it starts pulling all the way back here to the 200, then we'll have to really look at it. Because the reason why I say that is on the way up right here, it had this little move down and it pivoted back up right in there. Right, that's what I'm looking at. Google, they being, I don't know exactly who they are. That's the problem, is I don't know who I can call to complain that there's not some diversity here in ticker symbols. It's not fair to the other tickers. How would you feel as a ticker not being in the top 10? All right, so maybe I'll start identifying as a stock ticker. Right here, 105 to 110. We're in this range. We see going back here, this 105. It's actually on the downside of that 105 for Google. And again, all right, that one, okay, it's a little over. Berkshire Hathaway. This is these two guys. Warren Buffett is the popular of the two, and this other one, Charlie Munger. And some people are just in love with those two guys, right? And I'm not in love with them. Like I don't so much have stuff against them, but I don't think I think a lot of times, just like you, just like me, there's a little more to our stories than what meets the people that we just are acquaintances with. And I think if you're a billionaire, you probably try to create an image, like you and I, we create images for ourselves, and it might be looked at a little bit differently when you're in the billionaire status, what kind of image you want the country to perceive you as. So I don't know. I definitely I definitely think the guy knows about investing, but I don't necessarily think he's the innocent old grandpa that he makes himself out to be. And just because Warren Buffett does something doesn't necessarily mean that I want to do it myself. In fact, I know some people that won't invest in companies that Warren Buffett invests in because he kind of creates things to be great for him and not great for other people, so say. Now, that's just kind of I don't know that for a fact at all, and I don't even know if I believe that is my opinion. I'm just telling you what I've heard people talk about. Whether it's true or not, I don't know. It's something to keep in mind and research more if you feel like researching it. Over here, Tesla, I don't know, for all these big headlines, right? I don't see any big pullback. We're holding some support right here at, what is that? I guess the 180. Is that 180? Yeah, holding some support at the 180. So, you know, whoop-de-doo. You know, I guess when you sell ads for a living, you gotta make sure you're selling some ads. Nvidia, okay, we see it's pushing to this top of the range. All right, here it's at that at 280, having a hard time getting over that. Let's see what's gonna happen. Is it gonna get over that? JP Morgan Chase. Looks like we're running into this resistance area right in here. Now, as I mentioned with the Qs, it's basically like 90% of the same. I don't know the percentages. I'd have to kind of figure out the math. But here's the Qs right here. And we're looking, we got the sideways thing going. We look over to the left. Not so much of a surprise. Maybe getting top heavy. Volume down there. We looked at Apple. We looked at Microsoft. Let's just go right down here to PayPal. And just it's more moving sideways than down, but it's definitely down. You see over here, this part it kind of starts slowing that downward trajectory, went up and kind of went back down to right around this level, and it's just kind of been in that level. I never really looked at the fundamentals of PayPal, so I have no idea if it's like a company that I'd feel good owning for a long term or something like that. But not sure. I've never been a big PayPal fan, to be honest with you. Even back in 2013, 2014, 2015, when I was running an electronic cigarette business, I had certain vendors that didn't want to take like checks and stuff like this, and they'd want you know, online whatever transfer payments, and this one guy was really concerned about using PayPal. It's like the rumor back then is like if you do something that PayPal doesn't like, they not just freeze your PayPal account, but if your bank account is connected to your PayPal account, then it freeze your bank account. And again, I mean, that was all the way back. I was hearing this all the way back in 2014. But there were some people that were, and not just this person. This wasn't the only person I heard it from, but this person definitely would not use PayPal because of that. And because yeah, maybe it was like if they knew it had something to do with electronic cigarettes, then they were like freezing everything that you had. And you know, so stuff like that. I've never really been, you know, so much into that. And so I don't know so much about PayPal, you know, and that cult leader Tesla guy, he's one of those dudes from PayPal. Over here at Adobe, we are running into this and run into some resistance right in there. Let's look at the diamonds. Here and here, we're kind of more towards the top of this range. It really seems to be hitting this, hitting some resistance right through there. This one's exciting to me. United Health Group. It's so volatile. Man, look at that. I would like to find a way to trade this with my current work schedule and living in the in the Hawaiian Standard Time Zone. Not sure, but there is going to become some day. You know, I just came back from Florida a couple days ago. There will come a day when I'm living in the Eastern Standard Time Zone. I don't know what state, but when I'm living in the Eastern Standard Time Zone, I will continue to sell cash secured put options on stocks I want to own, but it doesn't take a lot of time, right? You're without spending a lot of time in front of the computer. So when I'm living in the Eastern Standard Time Zone, I'll say, you know, I'm not going to put any dates on there because it's definitely something that I'm working on, but I got some things here that I'm working on that's going to allow me to be over there without needing to have basically without needing to do anything but sit in front of a computer screen if I so wish. And so while those things are coming together, a stock like this, I'll find a way to maybe day trade this. This looks great. You don't have to day trade Bitcoin for all that volatility if you day trade something like this. Okay, it moved here from about it's like a little bit over maybe about a $20 move. And granted, it's an expensive stock. Maybe you do buy a put option or something, or if you have the type of account to have like 100 shares of this, 200 shares, 5,000 shares, something like that. You get $1.50 out of that $20. It's a pretty good income if you can pull that off a couple days a week, over and over and over throughout the months. Goldman bounced off this 200-day moving average and kind of pulled back. Where are we over here? Looking, yeah, kind of getting stuck in that. Not a surprise seeing that. Home Depot. Yep. A lot of these, there's like, it's kind of a mixed bag. I think that's why overall it's just kind of been moving sideways. Over here, we already looked at Microsoft. Salesforce, topped again. We'll see what's going to happen. We need at the minimum, we need a few big name stocks to keep moving. Well, McDonald's is doing it right there. Boom. Go celebrate with some of that unhealthy food. It's a healthy stock, but I tell you what, it's probably, if you want to make it to the Olympics, you probably don't want to be loading up on Mickey D's every day. Probably want to be eating better than that. Now, this is sort of breaking out of its range right in there too with Honeywell. Let's put this, let me draw this really straight line right there. You see how straight that line is? Boom! Look at that. Does that really matter? I don't know, but I guess it's worth it's worth doing. Visa. All right, Visa. Okay, it's a little bit higher than it was right here, but like it got way up there. So it's in this range, right? That's something. Please keep in mind that it's never an exact dollar amount. It's a little bit of a range where the support and resistance comes in. So what are we seeing? Look at that, Amgen. Right, high, lower high, lower high. Continuing to go down. Okay, you got a low, higher low. You really count that as a higher low? Maybe. So, chart reading is a bit of an art more than a science. There's people that have done a fairly decent job of turning it from subjective to objective by different definitions and things like this. But it's still an art. It's not a science, right? If you make your own definitions and you agree with them, and it's not like the whole world agrees with them, and maybe you can kind of systemize it like gravity or something. What do we got over here? Boeing. It's falling down. What the heck was I talking about? Kind of bouncing off. Bouncing around over here, my friend. My pals. All right, let's see what's going on in the Russell 2000. Russell 2000 looking sideways. All right, we're flattening out here on the 200-day. AMC. I don't know. Like I didn't even notice anyone making videos about going long AMC lately, but man. I know that was one that was like people were like talking about how this is going to the moon and all this type of stuff. I hope you exited your shot to the moon right here, because I don't know if that's coming back. It might, but your good buddy Brent, I'm not playing those cards. I'm not playing those games. I'm looking for a game that gives me a little more probability of success on my part. All right, so running over here on the shock wave. Got this nice bowl type of formation. So we see it bottomed out, real kind of made that drop down, kind of went sideways, and then started moving up, gapped up over that 200-day moving average. A lot of volume right there. There's probably some institutional buying right there, and it's kind of been running up, and now we're closed. We're still in that closed right here. So now we're in the bottom of this, and it could start running back up again. Right? It could go sideways. It could go down. Those are the only three directions it can go. If we see it continue to close below 260, start coming down here to test the 250, then that's what it's doing, and it might be might have a change. Biohaven, we're just back here in this, stuck in this resistance zone. Intelia, has that Amazon, Tesla look to it, and it's doing that thing. Crocs showing some, look at that volume. Boom, look at that. Got to be some institutions. I guess maybe it doesn't got to be, but it very likely could be. All right, so, but we're over that 140. It seemed like 140 was a bit of a resistance. Let's look at the 5-year. All right, so this is 5-year weekly chart. Ah, look at that. Yep, look at that. This area, 140-ish, some resistance right here. So here we were below that, right? We're running into this. Now it's poking up above that, but it did poke up above here. And so I guess we'll have to see what's going to do between 140 and 160, 140 to 150, 160. Was this chart industries? Yes, it is. And man, stuck with this resistance around that 130-ish. Karuna. Look at that big gap up right there. Man, what is that on earnings? If you had a straddle on that, bam, you would have banked. You would have banked on that one. But you have to exit that before all this happened. All right, you'd probably still be banking. Depends how long your contract is, right? But now we're hitting that resistance around the 200. Apelios. Look at this, another gappy one. Gappy. Look at this gap in here, gap in here. I don't even know what's making this gap, right? It's gapped here on earnings, gapped here on earnings, didn't gap here on earnings, didn't gap here on earnings. It's gapping, and I don't know what's causing that huge, roughly about a $20 gap right in there, 18, something like that. So, you know what I'm gonna say, right? Sell cash secured put options on stocks you don't mind owning. It's the same thing I'm gonna say all the time. This is giving us an accurate representation of what happened in the past. This is not fake news right here, my friends. This is real news. This is the real news right here, not fake news. This is more of a long-term average, and this is a shorter-term average. And we got a wide gap between those. Could keep going higher. Let's look at the line chart. Still, we're going to figure out what's going to happen at the 420, right? We got this range that's basically 420 to 380, and it's a little tighter than that, but whatever, just to kind of have some numbers to look at. We can see it's definitely been staying in between that. Right here it went over the 420, came back, and right here it went past the 480, came all the way down here to 360-ish. I think if we really line this up, we're going to find out it's at 357. You like that one? And over here it came down past that 380. But over here, right here, 380 kind of turned a little bit lower, 380, got close to 380, pulled back. So that's what I've been looking at. I'm like, until it really decisively goes past one of those numbers, 420 or 380, until it goes into some numbers that don't allow me to bring up some silly joke that only some people know about because of whatever community, not just community, whatever, your hobbies are. 380 and 420 and 357 and, oh, good gracious. But, hey, if it goes up past 474, I hope it hits 556, And if it goes down, I hope it hits 223. But, whatever. I know we could come up with these jokes all day, but these jokes don't make us any money. At least they don't make me any money. I'm not a comedian. So what am I doing, man? I'm still continuing to do the same thing I've been doing for a long time. This is what I'm doing. I'm selling cash secured put options on stocks that I'm happy to own. I have certain stocks I'm selling call options against, right? So I got covered calls. There's certain stocks I want to buy more of that I'm selling cash secured put options against. Even if I have them, I'm still building a bigger position. There's certain stocks that I don't want any more of, that I'm happy to have anywhere from 100 to whatever shares, and that's all I want. Some of them I'm happy just with 100 shares. That's it. Just one contract. And then some of them I'll do the wheel strategy on. So like let's look at something. This is not financial advice. This is it's not financial advice. I'm not recommending this, but this is one that I have definitely. This is a stock that's suitable for me. I don't know if it's suitable for you, right? That's the thing. You got to learn how to find out what's suitable for you, but it's definitely suitable for me. So H&R Block, I like this. I don't think the H&R Block is going to be subjective to the same type of thing that happened to Blockbuster, although it could be subjective to the same type of thing that happened with Enron, maybe not in the exact same way. But as far as obsolescence risk, taxes aren't going away, right? That's not going away. We're going to continue to have taxes, no matter if they being the parasitic politicians. No matter what parasite is in the White House, a Democrat parasite or a Republican parasite, no matter how much you like any of your parasites, I still call them a parasite. That's my pronoun for the politicians, parasites. So whatever parasitic politician is in office, if they raise taxes, if they lower taxes, they're not making taxes go away, right? They're just playing with this this possibly unnecessarily evil. I don't know. I don't know if it's necessary or not, right? That's a philosophical debate that you can debate with Doug Casey. So, but anyways, this is what I'm trying to get at here. Now, this one, I'm not gonna. Now this one, let's say if I wanted to use this for the long term, right? Let's say if I had a zero position in here, and keep in mind, right? In order to do this, you're gonna need. Let's do it like this. Let's say that. Let's say you got. Let's say you got $10,000 in your account. You got $10,000 of cash, and this is the only stock you're working with, right? So this is how I'll do things with selling cash secured put options and kind of wheel strategy, stuff like that, right? So I see came down here. Now there's definitely more that I do, right? There's more that I do. I go through. Oh, that's not the right one. I go through and I look at a variety of things, right? So I'm skipping a bunch of stuff here. I'm not going to look at the volume profile. I'm not going to look at the Kona probability. There's a bunch of stuff that I would actually go through before I started doing this. But let's say I went through all that, and I found out that with fundamental analysis and all this type of thing, I'm thinking that that anything below $37, and I'm not saying this is true for the stock, but I'm pretending here. So let's pretend that anything below 37 is a good deal, right? So what I might do, if this is a stock that I want, I might sell a put option here, and then maybe I buy 100 shares. Let's say I bought 100 shares at 34. Let's say I bought 100 shares. Somewhere, yeah, let's just say I bought 100 shares at 34. All right, so I buy 100 shares at 34. So that's minus 3,400. And I got, I'm selling another cash secured put option here. So that's giving me a legal commitment of another $3,300, right? Which, oh, snapples. 10,000 minus 3,400. About that. Minus 3,300. Okay. I guess it's that's right. Leaves me that. And then let's say I sell a covered call here at the maybe 34, right? Sell covered call at 34. Now the covered call doesn't constitute any of this cash, right? Because it's covered with these 100 shares I bought at at 34. And did I say 35? I'm at the 35.50. I'm selling that at the 35.50. All right. So if it runs up and I have it, and I had this the stock called away from me, I'm making $1.50 on 100 shares. Now that is in conjunction with the premium that I got here, the premium that I got here, and I might even sell a cash secured call option maybe at 36. Now the thing that I have to do though that makes it a little bit riskier, right, is that I only have $3,300 left in my account. So I need to monitor this, and if this starts well, one thing I'll probably need to do is I'll probably need to figure out how to quickly add I don't know, another $500 in there. That would do it, right? So I somehow figure out how to add another $500 in here. So now I'm good, right? Now if you say, well, how would I do that? It's called work. It's called reducing your living expenses. It's called don't drink a bunch of beer. Instead, put that money in the market. You got to do whatever you got to do. Now, this is the part that if you don't have the inner intestinal fortitude to make it happen for yourself, I can't give that to you. If you don't have the grit to tighten up your financial belt, I can't do that for you. If you need to go out and spend a bunch of money on worthless stuff, hey, that's your life, right? So you do you, but I'm telling you what, I wouldn't have a problem putting an extra $500 in there, even if I had to wait a couple weeks to get paid. But that's me. I don't know about you. So anyways, once I scramble to make sure I got enough cash in there, even though I'm not covered with the stock, I'm covered with cash that if the stock starts running up on me, let's say it starts running up to 35, right? Before I sell this call option over here at 36, I'm going to make a decision of at what point, if this stock starts moving up, at what point am I going to cover this position? Now, here's some other caveats with it. Let's say it runs up here too, and it also kind of depends on the expiration time and things like this. But if it ran up here to, if I sold the 35.50, if I got called out at 35.50, that might give me enough money just to buy 100 more shares at around there. That I get called out at 35.50, maybe I buy 100 shares at 35.50, so that way I'm covered here, right? So there's a little bit of it ends up being a little more complicated. It really does. But this is what I love doing this. So maybe maybe once it gets to about 35, maybe I purchase another 100 shares. So that leaves me with $300 left. I'm tapped out, but I got 200 shares of, actually I'm going to have more than $300 because I got premium from here. I got premium from here. I got premium from here, but it's probably not, like $300 worth of premium. But I got 200 shares of a stock that's going to pay me a dividend, and that's it. So that's what I do. So if the stock starts moving down, what do I do? Right? I keep this premium. I don't have to worry about it. I wouldn't have the 200 shares. I would just have the one. Maybe I end up getting 200 shares because I buy it right here. Start selling more call options down here. Or excuse me, start selling more covered put options down here. All right, and I just kind of work that. But I've been doing this for a little while. If it's like, oh, I thought you said it's not going to be much maintenance, or you don't have to spend much time in front of a computer. Well, don't do the extra stuff then. Just start out simple. Start off selling covered cash secured put options on stocks you don't mind owning, and then if you get assigned, start selling a call option at a strike price at least 50 cents or $1 above where you bought it at. Now, if you want to own it for a long time, let's say I want to own this for a long time, then I'm probably not going to sell a 35. I'm probably going to sell like a 36. I'm probably not going to sell a 35.50. If I want to have the least amount of chance of getting called away, I'm going to take a little less premium and I'm going to sell further away from the money. And but I'm still harvesting premium. If I want to do more of the wheel option, I don't care about spinning that wheel faster. And I get it. There's different tax consequences and all this stuff. But I'm going to sell a little closer to the money, and that way I can get more premium. And I don't care if it gets called away because I'm going to just sell cash secured put options. So let's say you got a stock that's running up. Like, let's say you got a stock that's running up. You could spin the wheel all the way up here, right? Assuming like you got this much in your account to do that with. All right, so you could just, you sell the cash secured put option, you get 100 shares here. Let's say you sold it down here and it happened to expire. This is the day that expired. So you bought it at 125, right? 100 shares at 125. And then let's say you sell the covered call up here and it runs up here and then you get called out. So then you just start either buy another 100 shares. You just got called out, either buy another 100 shares or sell maybe you sell a at the money put option. So you bring in premium and you're basically, like you could sell a 135 cash secured put option, and maybe that expires worthless, and it rolls up, and then you just keep selling and kind of doing it like that. Make it work for yourself. And what works better than me explaining it like that is you actually doing it. Try it in a paper trading account. The learning, it's really not that hard. It's complicated when you need to learn these different things, but this is easy. It's complex, but it's easy. You ever heard people say it's simple but hard? Well, this is easy but complex. This is the opposite of that. It's not simple. There's a lot of moving parts, but it's easy. So take it for what it's worth. You guys have a fantastic day.